Welcome to day 13 of the Wall Street Crossover Show, brought to you by Tip TV in conjunction with our sponsors, Admiral Markets. It gives me great pleasure to introduce Mr. Darren Sinden, market commentator for Admiral Markets. Darren, morning. Or good afternoon, really, now, isn't it?
Good afternoon, yeah.
What a 24 hours.
It's been quite extraordinary. It's one of the best things about being in the markets is that you are a constant witness to history, and I think we'll all remember this day for a long time into the future.
Just extraordinary.
Absolutely unprecedented, really, what we've seen in the last 24 hours.
Yeah. No. Well, the markets, clearly the equity markets are very happy. Sterling's very happy, and there's some resignations.
Yes, I think if you come down on the blue side of UK politics, you're in the markets, you're probably quite happy. Everybody else, apart from UKIP, perhaps is probably, and the S&P is probably very disappointed. Yeah. So a real change in the UK political scene.
Understood. Okay, if you're watching for the first time, we're going to run through 5 different areas, circa 10 minutes. If you've got any ideas, any thoughts, please get in touch with us. We're going to do some changes this weekend, but you'll see those next week if you're a regular. Okay, so let's go to the first slide today. The data released over the European session ahead of Wall Street. What caught the imagination this morning?
Well, I mean, there were a few small data points from Europe, but I think we've already touched on the principal news coming out of this side of the pond, and that was the UK election results. The Conservatives snatched a surprise election victory. I put it in inverted commas because as I left the office, they still only got 324 seats. They need 326 to claim an absolute majority. But the polls prior to the exit poll last night, the suggestion was they would run neck and neck with the Labour Party, and that there would be a hung parliament, touch and go as to which one of the two would be the party with the most seats and probably try and form a coalition. That's not the case. It would seem that the Conservatives will form a majority government and rule in their own right. Labour has been decimated by the 56 seats that the SNP have won in Scotland. There's basically 3 seats left to declare, I believe 2 seats left to declare, and so Labour's been swept out of Scotland. The Tories have done magnificently well, and the other big loser, the Liberal Democrats, 8 seats. Annihilation really is the only word you can use.
Understood. And in terms of the currency markets,
well, I mean, sterling rallied instantly on the release of the exit polls last night, just after 10 o'clock, and it hasn't really looked back since. We've come off the peaks. We did trade above briefly to and through 155. Gilt yields fell, gilt prices rose, and the market has really given the election result as big a thumbs up as it possibly could on a day like today, I think.
Understood. Okay, let's take a look at the FTSE 100 movers this morning.
Slight deviation today, Nick, because the market, as we've said, is one way.
Sea of blue.
Yeah, all FTSE 100 stocks are up on the day, so I thought we'd have a look here at the sectors that have moved. Electricity and utilities and water all sharply better. I think that says a lot about the way the bond market's moved, and these 2 sectors particularly are effectively bond proxies. Yeah. And a Tory government seen as being beneficial for the underlying industries as well, where Labour might have tried to clamp down on excessive charging, etc. Support services up, as we saw earlier this week and last week. Service industries across the world doing very well, and again, a Conservative government seen as being very positive for that particular sector, and perhaps no surprise as well to see the banking sector up by almost 3%. Again, whilst the Tories have not exactly given the banks an easy ride, they're giving them a much easier ride than perhaps a Labour SNP.
I think the argument as well was that if Labour got into power, they'd be more favourable towards the challenger banks. So.
They possibly would. So good news for the banking sector, and as we said, the FTSE up by about 1.97% as I left the office to make my way across here.
Back above 7,000.
Exactly.
Okay, let's go to the M&A rumours and movers.
Okay, well, a big deal in the offing, perhaps in agri-chemicals. US Monsanto has bid for its Swiss rival Syngenta. The Syngenta board has rejected what they called an unsolicited approach that totally undervalues the company. Monsanto's apparently said to have offered around 449 Swiss francs per share. Offer was a mix of cash and paper, just around about half and half. Valued Syngenta around 41.7 billion Swiss francs. Syngenta share price there rallying again. It'd been trading a bit better over the last few days, but 18.46% as I left the office, around 394 Swiss francs. As I say, the deal had been rumoured over the last week, so Syngenta had been creeping better. What I find most interesting about this is the first approach to a major Swiss company since the Swiss franc debacle in late January 2015. There's all sorts of reasons why this might not go through, competition reasons, probably foremost amongst them. Certainly an interesting deal to keep an eye on. I'm sure that was just the opening round, and we won't have heard the last of this by any means.
Understood. Okay, let's move on to the US data points to keep an eye on today.
Well,
the big number.
Yeah, all roads lead to the non-farm payrolls and associated data. So yeah, 1:30. So soon after we come off air here, we're looking for. Remember, the non-farm payrolls is new jobs created, so we're looking for a figure of 220,000 new jobs versus 126,000 in March. March, of course, was a bit of a shock.
Yeah.
It was such a low number. Unemployment expected to fall marginally to 5.4% versus the 5.5% read in March, and then. Average hourly earnings are one I like to keep an eye on because obviously inflation is an issue, or a lack of it in the US, and so wage growth is important. But again, we're not looking for a very exciting figure, just a 0.2% gain versus 0.3% in March. And then hours worked, the average working week, again a sign of demand and productivity. Again, no change here. We're looking for 34.5 hours versus 34.5 hours in April. So a deviation from any of these numbers will obviously have an impact. Obviously, another poor number could be detrimental to the dollar. So that's not what.
Well, it's all about interest rates, isn't it? Everyone's all eyes to this number to see the impact for the Feds.
Absolutely, but of course we could well find ourselves in a situation where if we do get a weak number, it's still perceived as good news because people will think that rates can remain lower for longer, which is what the market seems to like at the moment.
Understood. Okay, let's go to the final slide, US pre-market movers and the chart points.
Okay, well, I just picked out a couple here. First of all, Sprouts Farmers Market, SFM, the ticker in the US, a sort of discount Whole Foods type store, if you like. They reported last night they missed on both earnings and revenues, and at the same time Whole Foods Markets, so their sort of upmarket competitor, if you will, announced that it was launching a value brand to compete directly against Sprouts Farmers Market. So it's not just in the UK that food retail is tough, it's tough in the States, and the shares of Sprouts have been called down 9% accordingly. Another stock that took my eye, Solar Edge Tech, the clue's in the name, it's a solar cell company. SEDG is the ticker, up 15.75% because they had big beats on both earnings and revenues, and they issued higher guidance for the next quarter. They're actually on a different earnings cycle to most of the US stocks, so they're actually reporting for Q3 and guiding for higher for Q4. Nonetheless, 15.75%. That stock's rallied pre-market. In terms of levels to watch today, it's obviously all going to be about the data at 1:30, but we'll put in 2067 for the S&P on the downside. 2088 is your upside level there. In the Dow, 17,775 to the downside. 17,992 is the upside level. And currency-wise, euro dollar, possibly an opportunity for further euro strength today, but 111.95 to the downside and 113.80 your upside level. Aussie dollar, US dollar, as you know, we think the Aussie dollar is well sought after a well bid, so 78.90 your downside level, 80.40 to the upside. Dollar yen weakness showing its hand once more, 119 even to the downside, and on the upside 120.72 the near-term level to watch. And obviously cable, the basis has changed. The downside 153.53. I'm not sure we need to worry too much about that for the minute. And 155.00, the upside level to watch for, round number significance. And obviously, and perhaps the continuation of this rally we saw overnight and through this morning, perhaps into the next week.
Okay, I think 155.50 just as well is a level. There was a sort of a high that basically I could think it went through 52 and then pull back on that counter trend. But brilliant. Okay, Darren Sinden, thank you. Day 13 done on the Wall Street Crossover Show. We'll see you bright and breezy at 1 o'clock on Monday. Ladies and gentlemen, have a great weekend. That wraps us up. We'll see you Monday. Thank you.